All right, guys, welcome back to the Canadian Real Estate Homefront Podcast. This is episode 49. Before we get started, if you guys are interested in booking a call with Brooke and I, if you're interested in making a move, buying or selling, you click the first link in the description. You'll get to know us and you'll see if we're a good fit for your real estate needs. There's no pushy sales tactics or anything like that. We just get to know your situation. We give you our honest opinion on it, and then you can decide if you want to work with us or not. So yeah, click that first link below and you will get to meet us. There's a lot going on in Canada these days, a lot of election and politic push right now, and they just released the budget for 2024. So we're going to get into it, and we're going to talk about mostly the stuff that has to do with real estate, more so than anything else. So yeah, Brooke, you ready for this?
That's how I feel about the budget being released. It's a big sigh.
It is a big sigh.
It's a big sigh.
Why don't you read the first part?
Okay. About raising tax on capital gains. Okay, we'll break it down, but I'll start with the summary of the article. So the budget proposes to increase the capital gains inclusion rate for individuals from half to 2/3 for annual profits above $250,000 effective June 25th. A capital gain occurs when someone sells an asset, such as a home or a stock, for a higher price than what they originally paid for it. Currently, only 50% of that profit is included in tax calculations. Half of the capital gain is added to a taxpayer's annual taxable income and taxed at their marginal tax rate. With the new inclusion rate, 2/3 or 66.7% of an individual's annual capital gain above $250,000 would be taxable. The government said the measure will boost revenues by raising taxes on a small minority of Canadians with very high incomes. But the higher inclusion rate described in the budget would also hit middle-class Canadians who experience a one-off financial windfall from certain types of asset sales. While the sale of a primary residence is exempt from the capital gains tax, Canadians selling a vacation home or rental property would be subject to the higher inclusion rate for net capital gains above the $250,000 threshold.
Yeah, it's a lot to take in for sure, but it basically what they're doing is that if you have this like big capital gain on something, they're going to tax you at a higher rate than what they were, and they're trying to make up for their budget.
For their overspending. They have to make up the money somewhere. So if they're spending more money in other ways, like where is that money coming from, right? It's usually an increase in tax.
Yeah.
So we saw that coming, knowing that the government was above their targeted deficit number. So they're going to have to make up that money somewhere, either cutting programs or taxing people higher. It's one of the two.
For sure. And that's just what we're seeing, right? We're seeing the Liberals kind of come out and say, you know, it's a very small minority of people, but this affects more people because when you disincentivize people to invest in an economy, because it's not just like real estate.
Right.
It's going to be businesses. Like even the owner of Shopify, which is one of Canada's biggest company, it's created so much job growth. He even tweeted something about it, just basically saying, you know, he didn't say these words, but money flows where it gets treated best. And it's not get treated best here. It's getting treated best in, you know, for example, the States. And that's where a lot of people are going to go invest, and companies are going to go invest their time and money is in a different country that actually promotes entrepreneurship. And unfortunately, people are going to pull out of Canada, and we're going to see quite a windfall in terms of the tax on you know, residential properties and stuff like that. I don't know if we'll see a lot of people go to market quicker if they have like a big gain, like they bought something 10 years ago.
Well, yeah. And like, think about the people that literally buy property, flip it, make it livable and want to sell it. Like being taxed at 66.67% doesn't even incentivize people to build and sell. Yeah.
It's kind of back to this idea of Canada. They just think that you can keep taxing. So like if you think of Canada as a business, it would be like us and our business. We just keep charging our customers more and more, the customers, the taxpayers, and we consider that to be like profit for us. Like, you know, you're just overcharging people. Eventually people will stop working with you.
Right. Oh, 100%.
And eventually people will go out of Canada and go to other places that are tax exempt. And like, this is all over Twitter. Like Americans are talking about this, just saying like Canada is just like deteriorating and it's going to deteriorate further because of this. Now, like the way they packaged it was like, we're here to help the middle class, but you're not, because job growth and job creation is going to stall because our economy is becoming even more unproductive through taxation.
Yeah, they're not increasing productivity at all because small businesses will stay small.
Mm-hmm.
New businesses, like that's not a very warm incentive to come build a business in Canada.
Yeah.
Like if you had a choice, Canada would not be number one to build a business. And even the startups of actually wanting to build a business, Canada doesn't make that part easy either.
No, they don't. And it's going to be even worse now because more, like you said, more people are going to go to other places. They're not going to be wanting to build a business here. Why would like the guy who started Shopify, like why would another Shopify ever want to start in a country that's taxed so high?
Right. Well, we are talking about the disposition of assets, right? So if you're thinking about buying a secondary property, but not flipping it and selling it right away, when you go to actually sell it, yes, the tax is higher on your profit. Now, there's some ways that it could still prove to be a good investment. Like if you're carrying it long term and you have the cash flow, if it's gone up a ton, like you can still make money. If you live in it for a little while and then appraise it really high before you move out, it's only from that appraisal date to when you move out to the time you sell. So if you ever live in an investment property for a little while, make sure you get a high appraisal the day you move out because it'll only be the difference from that appraisal date to the time you sell. Because it's not talking about taxing corporations more in terms of the corporate tax of what they're actually making, which could still prove to be, like, you could still have a successful business. It is about the disposition at the end of the day.
Mm-hmm. If I was to give advice to anyone, and obviously don't take this to the bank, but I would if I was in the position where I had something and I was like, oh, maybe I should sell it before the deadline and get ahead of it, I would wait until the Conservatives get into power, because there is no doubt the Conservatives are going to come after the Liberals on this topic and just rip it to shreds and then promise their voters that they're going to get rid of this and go back to and it will happen. I can almost guarantee it.
Yeah.
Because it's just the only reason why this is happening is because they want to spend so much money. So here we are in this kind of push and pull of people wanting to spend. And then also in the budget, this one we can talk about more. Among the widely publicized measure is the introduction of a 30-year amortization period on a mortgage for first-time homebuyers who have a down payment of less than 20% and want to purchase a newly built home. Now, when I bought my pre-con, they wanted 20% down, and most builders do, especially in today's economy. So if you're going to purchase a newly built home, you have the 20%, so you're getting the 30-year amortization, right?
Yes. Yeah.
Yeah.
Well, essentially, it's like if you put 20% down, typically it's a non-insured mortgage because you have the 20%. Anything below 20% becomes a CMHC insured mortgage. So if you have 20%, typically you are only able to qualify for a 25-year amortization. So non-insured equaled 25 years. Now they're saying non-insured, you can actually extend to 30 years. However, I see this everywhere and everyone's like, oh, that's good. It's going to reduce our payments and whatever, but it's only for newly built homes.
Yeah.
Where do you find a newly built home unless you're buying pre-construction? Like you can't just be like, okay, I have 20%, excellent. I'm going to extend my amortization period to 30 years, but go shopping in Hamilton. No, it's all resale. Where are they building new homes? Maybe somewhere you don't want to live. Maybe you're paying a premium for the newly built home anyways.
Yeah. Yeah. I don't get it. I think it's just like another way to try and gain votes, because most people know that with pre-construction, you have to put 20% down, or a newly built home. So I don't really see the value in this one too much.
No,
and again,
and
you're just kicking the can down the road.
Yeah. And also HST is only added onto newly built homes. So it's like you see the hidden part of it where it's like, oh, this is a good thing. But then it's like, why not just put it on resale?
Yeah. No, I agree with you 100%.
Well, newly built homes, the government's getting their HST on those.
Yeah.
So they're able to do that.
That's an interesting point. Yeah. Again, another policy that I feel like needs to be looked into a little bit more. Like if you said on any home then that great. you were doing it, then it would be like, okay, well, that makes sense. And the 30-year AM, would you still be paying the CMHC premium?
No, because if you're putting 20% down, you typically could only do 25 years.
But if you put 10% down, like say they actually did for any resale.
For any resale?
Yeah.
Oh, our dogs are going
Dogs are
crazy
fighting here. Sorry
today.
about that.
Sorry. The non-insured, insured can go to 30 years.
Yeah. So you'd still, even if they did on resale,
right,
you'd still have to pay the CMHC premium. But they're going to give you a 30 AM, so you're going to extend your payments.
Yeah.
But you're still going to have to pay a longer duration.
Yeah.
So you're going to pay more interest, and you still got to pay the CMHC premium.
Yeah.
Okay.
Yeah, actually, I just said it backwards. So like what I just said it backwards, just so that our listeners can understand that. Non-insured mortgages, meaning you're putting down 20% or more, have you been able to do 30 years? It's the opposite. If it is an insured mortgage, meaning less than 20%, you only could qualify at 25 years. So sorry about that, guys. It's completely backwards than what I just said. So if you put down 10%, you would only be able to get a mortgage up to 25 years. Now you can put down 10% and have an amortization of 30 years if it's a newly built home. Okay?
Yeah.
Just to clarify.
Yeah.
I always get it backwards.
I know.
But that's only with a newly built home. Now, would it help your payment a little bit more? Yes. Would you still have to pay CMHC? Yes. Just to get all of that clear now.
Yeah, so not much of a change, to be honest with you. It feels like two policies in a row. You have one stopping productivity, and then you have another one that's supposed to create affordable housing, but it's really not creating affordable housing. So there's that there. And then Ottawa is also proposing to increase the amount of first-time home buyers can withdraw from an RRSP through the Home Buyers Plan from $35,000 to $60,000 and temporarily extend the grace period homeowners enjoy before they have to start pulling money back into the retirement savings account.
I mean, does it help that much? I mean, sure.
Yeah.
Okay. And especially if you're a couple and you guys have put money into an RRSP, now combined 120.
Yeah. I mean, it could work. I think that basically they're talking about housing, which is important. I'm not saying what they're doing is going to make a huge difference, but they are talking about it. I was quickly listening, but I didn't finish it. I was listening to Daniel Foch interview Sean Fraser, who's the housing minister. He had him on. So he had some okay policies that I was listening to, and at least they're trying, at least they're doing something, because for so long, but a part of me is like, it's kind of too late. Yeah. It's almost time for new leadership to come in, and it just feels like every single day it's just getting worse and worse for a lot of people. Yeah. And a lot of people are just tired.
Well, even like look at the CTV news article that came out. Like how much percentage did I just share is living paycheck to paycheck in Canada? It is an insane percentage. I almost want to just pull it up and just read it to you guys. Half of Canadians living paycheck to paycheck. Half of Canadians.
Yeah.
That is astronomical.
Yeah, it's really sad. And you can see in the TFSA data too, a lot of people aren't putting money into their TFSA.
Because
they got nothing left to invest. Yeah. So there's another thing too. You have less people investing in Canadian companies. Like, I'm not saying through TFSA you only invest in Canadian companies, but a lot of people love like the bank stocks and the railways and stuff like that. So you have less people putting capital into those stocks. So I don't know. I think that Canada really, really needs an economic shakeup before something even worse happens, because we are getting so unproductive. And let me kind of go into my next point here. So the Canadian dollar could crater if the Bank of Canada cuts faster and deeper than the Fed, which is the U.S. Federal Reserve.
We like to follow closely what the Fed does because of our dollar. We can't devalue our dollar compared to the States, which is our big brother, because then trading and everything it's a bigger problem if we aren't following closely what the Fed is doing in terms of their overnight interest rate.
Yeah, you got it. So the Canadian dollar could be in for a rough ride if the Bank of Canada cuts interest rates sooner and deeper than the Federal Reserve, a scenario that economists suggest is being increasingly likely as the U.S. economy continues to outperform the Canadian economy. In a sign of what could come, the loonie fell more than half a percentage point against the U.S. dollar in the wake of the Bank of Canada's interest rate announcement last Wednesday, during which Tiff Macklin said a cut at the end of the rate meeting was now within the realm of possibilities. That put the weakened loonie in the crossfires of a stronger American currency and the Bank of Canada possibly at the mercy of the Federal Reserve that appears in no rush to start cutting.
Well, and you think about it too, it's like a catch-22 almost for Canadians because we have to stay close to the Fed. We just do. It is what it is. They're our big brother. But a lot of American-held mortgages, like we've talked about, are the 30-year fixed. So increasing the overnight rate isn't affecting their people as much as it's affecting ours. Yes, things are more expensive in loans and businesses. Like it is high there too. But in terms of your mortgage and waking up the next day to a double payment of your mortgage, that doesn't happen as much as it does here in Canada because a lot of their mortgages are on 30-year fixed terms.
Yeah. And let's go back to even just the capital gains tax there. I think it's 20%. So I was on Twitter there. So you're looking at 66% versus 20%. So again, you're going to have this, this capital leaving the country. And they even, in France, they had this wealth tax. This was a while ago, but I was listening to it today. And then it got so bad, and France doesn't have a lot of like billionaires.
Right.
It got so bad that they had to reverse it because so many people left the country.
Yeah, and you want these people, right? It increases the productivity of the country. You want people incentivized to build businesses and to create jobs and to further economic growth.
Yeah, 100%. Productivity is the key to an economy. And I know it sounds all good. Like we're gonna tax corporations, we're gonna tax rich people. And the way they frame it is manipulative because you want to incentivize people to build businesses like we've just been saying and do things where the economy is getting money. If you start pulling capital away, then we're in trouble. And like the loonie is falling compared to the US dollar because people are worried at how productive Canada is. Now, this happened
and that's so bad for our stocks too, because if the loonie starts to devalue even more, then all of a sudden all the people that have money in Canada's businesses like the stocks, now all of a sudden that's a scary thing. Very
scary. And our dollar devalues. So like you want to go on vacation to the States, that won't be fun. We want to import stuff from the States, that won't be fun. So it's just like this vicious cycle of like pain. And I was reading that this happened years ago, I think in the 80s, the 90s, where the Bank of Canada kind of deviated from the Federal Reserve. It wasn't too bad, but Canada didn't have as much debt as it does. Like now we have so much debt, and we did produce a lot of oil back then. When oil becomes more expensive, it is good for the loonie, but the States also produces a ton of oil now. So we're kind of in this like really sticky situation where as a country, we need to start investing and stop taxing people. It's just not making sense anymore. And I feel like what we're reading now and just online and Twitter, like everyone's just like stepping up and just like voicing their opinion. Yeah. Even I was listening to all these economists on BNN Bloomberg, just, economist after economist just saying what a mistake this is. Yeah. So I think
he's trying to also speak to his usual demographic of who his support is, Trudeau, which is, middle class or, Gen Z or millennials.
We're millennials, yeah.
That want to get their first home and they just don't see an end in sight. Well, quote unquote, taxing the wealthy seems like, oh, well, that would be good because then, tax them more so that we can maybe be able to buy a house. So that leads to less people investing, less competition in the market for secondary homes. So I see how some people would take that as a good thing if you're a young person or, middle class wanting to just get into the market. But I think that it's going to cause more harm than good in terms of our economy as a whole, which if you kind of draw the map forward in terms of consequences, does that actually fix the issue? No. I think you're just trying to pull your support back.
100%. And if you look at inflation, it's probably going to continue to the upside. We just had it come in a little bit hotter than expected, but core measures were down. So it looks all good. And but like again, like this, just because inflation's coming down, it doesn't mean things are getting cheaper. Like groceries are going to be expensive forever now. Yeah. We've done
unless
the damage.
we have
Deflation.
Disinflation is when a reading comes in at 3%, and in the next quarter, 2.9%. That's disinflation, which means the inflation rate is slowing down or decreasing, but it's still growing at 2.9%.
Yeah.
I've said that before. I don't think we're going to see deflation, nor do we want to. That's also bad.
It can be bad, but it almost could be good in this scenario. But that would just mean that we invested so much in productive tech where things are great. The only good thing in the budget was the AI thing that we talked about. Like, I think being on top of AI is an important tool. But what AI company wants to come to Canada if they're going to pay all these taxes? Like, it's just, you have to think about it. Like, angel investors, I listen to this podcast all the time. They say, like, we swing 9 times and we might hit 1.
Yeah.
But they're big wins.
Yeah.
But why would you want to do that in a country that taxes so high?
Yeah.
And that's why it's all happening in the States.
Yeah.
That's why they have all these massive companies that are way bigger than Canada.
Mm-hmm.
And it'll continue to go that way. And
Mm-hmm.
even other countries, like, you know, Dubai is this big buzz country now, and for a reason.
Yeah.
And you know, Costa Rica and
Yeah.
all these countries are just saying, hey, if you don't want to get taxed, come here. We'll take
Yeah.
your money and we'll take your productivity. So yeah, I think that it wasn't a good budget. I didn't
No.
expect it to be a good budget, to be honest.
Yeah.
And Canada is in trouble, I want to say, economically. Our GDP per capita is down. I was even...
Our GDP per capita is just always shit.
Yeah. And I was listening to someone talk about this. If you look at the per capita of the amount of people at the CRA versus the IRS, the CRA has 40 times the amount of people working for it versus the IRS. So it's just another kind of
interesting.
Yeah, kind of waste.
Did you see that graph that was like the product or the public sector, private sector?
Yeah, and then it was like entrepreneurship. I can explain that quickly. So a lot of people reached out to us, but it basically, the public sector graph was going way, way up. Private sector was pretty stagnant. Entrepreneurship in Canada is down. So what does that mean? Is that the job growth that we're seeing in the country is fueled by taxpayer money, because the public sector is the only really sector that's growing substantially. So even when you see these job reports and you look into it a little bit more and you see it's publicly funded, which is, again, it's
taxpayers' money.
And we are at a deficit. So if Canada was a company, it would be under, it'd be broke. So, but this is what happens to a lot of countries. They get heavily in debt. Their productivity doesn't keep up. The spending becomes out of control. And then the value of their currency devalues. And then people jump to other currencies to survive. Like although the US has a lot of debt, they are very productive, but it's still scary how much debt they have. But like a lot of countries use the US dollar. Like you go to Mexico and they'll take your dollar. Yeah. But it's interesting. Mexico's dollar is strengthening against their peso is strengthening against the Canadian dollar. And they have more trade with the US than we do now.
Oh my God.
Yeah, so
what is life?
Yeah, it's funny. Like you're seeing a lot of people go there and starting to invest in real estate. That's beyond my head, but I'm just starting to see it. So I don't know how long this trend goes on before something bad happens in Canada. Not to be doom and gloom, but it is like, holy, how many bad stories can we talk about before a good one comes out?
It's sad. It is.
It is really sad.
The cost of living is insane.
$100,000 doesn't go very far anymore.
No.
So yeah, we'll have to see where this goes. Like, I don't know, maybe they'll make some changes to the budget. There's probably a lot more to come out for 2024. So we'll see how that goes. And remember, there's an election coming up. So a lot of this has to do with gaining votes and getting in people's ears, and we'll see the Conservatives react. You'll see Pierre Poilievre everywhere talking about it, and you'll even see Jagmeet Singh talk about it too. And he'll make fun of Justin Trudeau and he'll make fun of Pierre. But at the end of the day, if election happened today, it would be because of Jagmeet Singh. He could force an election. So I don't know. I don't think he will because he wants his pension. I think that's a big thing. But we're just gonna have to keep rolling along here. But let's talk about the housing market. While we're here. What do you think? Do you think more people are going to sell their properties to avoid this?
I do, out of fear. I do. Yeah. I think that because if you do simple math, right? If you sell now versus in 2 months, and if you're planning to sell this year anyways, if you were planning to sell this year anyways, then why not? Right?
Yeah.
But if you look into it and actually become educated on actually what's going on and whether or not you think that the Conservatives are going to come into power, which I believe they are, and what policies that they want to introduce or change, how desperate of a measure it is to actually offload your property. Like there's other factors that are going to come into play. I don't know if a ton of people are just going to be like, okay, sell because I'm going to have to pay 14% more tax if it is a long-term investment for that person. But if you're already underwater and planning to maybe offload something to help out, then yeah, I do.
Yeah. That's a good point. I think like if you're in the luxury market too, we might see some more listings come. Mm-hmm. Like say you own a big cottage in Muskoka or something like that. Like, yeah. And you had intentions on selling it. Like maybe you put it up and see what happens, or I don't know, what another example could be, maybe in Whistler or something. I don't know. Yeah. You own a recreational property that you thought about selling anyway. Mm-hmm. So, and you've made a bunch of money on it because you bought it 15 years ago. That could happen. So I don't know. I guess we'll see. I don't think the actual resale market will change much, to be honest. I'm pretty sure we're just going to keep kind of chugging along here. Right. We'll see what happens in June. We'll see with this rate cut announcement. I don't know if Tiff has the stones to do it, but we'll see what he does. What about the
properties that have sold now before the budget came out, but close after June?
That's a very good question. I don't know the answer to that. So it's like, do you
beg the buyer to move up the closing date? Because now all of a sudden your calculations of selling it off and maybe breaking even or whatever the case. Now are you, I close June 30th, all of a sudden 14% tax? Or is it, you've already sold it. You've already made your calculations on what you can accept if you just want to offload an investment property. Closing July 1st. Now all of a sudden does that closing, because you've sold it technically that day was when the money was traded.
Yeah, that's a good point. I mean, it would make sense that it should be the day it goes firm. Like that would actually make sense. But again, the money isn't traded other than the deposit. So it probably is what you're saying. It's probably the former versus what I'm saying, which is the latter. But I don't know. I guess we'll see what happens to this budget. I want to see what Pierre Poilievre has to say about it, and that housing minister as well, and see where that goes. And I mean, not to create doom and gloom. We're just trying to keep you guys educated and give our opinion on it. So I think that's kind of a wrap there. What do you think? You got anything else?
Yeah, I've been getting a lot of questions regarding the capital gains and how to actually navigate investing in Canada if you want to become or want to have that secondary property where, you can expect cash flow maybe, where maybe it's not a short-term flip, because I think it's freaking some people out. Does it actually help in terms of these duplexes and triplexes? Is there not as many buyers for those specific ones? Like the investor class is going to take people out immediately. They're going to start looking at investing in Florida. Yeah. My dog is
going crazy.
Abby. Abby.
They're having some fun.
Hey,
guys, stop.
Nice.
We're almost done here.
Yeah, we're almost done. Our mascot is getting...
She's got a friend today.
Yeah,
so
she has a friend in the office.
Anyways, guys, we'll wrap here.
The dogs are getting rowdy.
But
if you have any questions about this,
comment down below even what you guys think as well. And DM us on Instagram or you can't really do it on YouTube, but
because we're doing a broad view of just kind of breaking down the budget as much as we can. However, like Cortez and I are also investors ourselves. Cortez is big in the stock market and that kind of thing. I don't really do that as much as he does, but he'll have experience that way, whereas I have a lot of duplexes, lots of tenants. You have your own set of tenants as well. So if you have questions about how we will proceed with some of these changes, I'm happy to share. I don't know about announcing everything on the podcast, but DM me and I'll kind of let you know what.
Yeah. No, that sounds good. I think that's everything. And this is kind of like not an emergency episode, but we needed to talk about it. And as more things unfold too, we'll definitely talk about it next week too. But all we know is the American economy is chugging along and Canadian economy seems weak. And do we drop interest rates quicker than the Fed and see what happens? I don't know the answer to that question. I'd hate to be Tiff Macklin, so that's a tough job to have. But anyways, guys, if you made it this far, thank you so much. Please like and subscribe to the channel. If you're on Spotify or Apple Podcasts, please leave us a review. Again, we're growing a lot, but we always want to try and grow a bit more and get out to more people. Follow us on Instagram and TikTok for that short form stuff. That's where we're most popular and known for, is all the short form, and we'll keep that coming. So thanks again. We'll see you guys next week, and take good care.